Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you getting some good trades. Look, it's a bird, it's a plane. No, it's Super Euro. Has the super currency lost its cape? The high-flying Teflon-coated euro that goes up, regardless if there's good or bad economic news out of the Eurozone, took a couple of bullets today. And to the surprise of many traders, these bullets didn't bounce off its super chest, but wounded the Super Euro. The first bullet, the standoff between the Ukraine and Russia. Ukraine news reported the buildup of Russian troops, while at the same time the threat of sanctions by NATO nations against Russia if it invades the Ukraine. Just make note, the fear of war sounds off warning bells and traders head for the exits into safe haven plays. The second bullet, a surprise. Comments from ECB President Mario Draghi. Now, the always confident, never flustered central banker expressed no concerns over the Eurozone's low inflation, high unemployment, and spiraling exchange rate during last week's ECB press conference, noting that the Eurozone's GDP in the fourth quarter had improved from 0.1% to 0.3%. But today, Draghi lowers the boom and has to do some damage control, in a nutshell, promising to take further action if the euro continues to rise. So in today's video, I want to talk about what Draghi said and the primary reason why the euro's been moving up and up and up, regardless of good news or bad news. And where do we expect the euro to go from here? Now, taking a look at this, you can see the move that we had to the upside overnight. Strong move up, due in part to the euro-yen's move with better than expected news out of Australia and the rise in the interest rate from the RBNZ. So the market sits flat here, and today, with better than expected news out of the U.S. and things all well with the U.S., well, that didn't really help the U.S. dollar as the market went risk on, and we see the euro push on up higher. News coming out of the Ukraine kind of stifled the movement higher, and then that's when Draghi lowered the boom, giving his comments that he's going to do whatever it takes to reduce the rise in the euro, and it saw an immediate impact of about 120 pips to the downside today. As a matter of fact, Draghi commented that the euro gains are increasingly relevant to price stability, and he does not want excessive deleveraging. He also wants to counter any material risk to too low an inflation expectation. That's aka deflation concerns. Also, the forward guidance creates a de facto, quote-unquote, loosening of monetary policy, aka the potential for quantitative easing, which Draghi said he wasn't going to do. And he'd use certain instruments like outright monetary transactions to cause some deleveraging and some sterilization in the Eurozone. But that hasn't really kept the euro from going higher. So why is the euro continuing to rise higher? Well, about 2.5 to 3 years ago, China had made the comment that they were going to reduce their holdings in U.S. treasuries and expand their foreign currency revenues in the euro, at the same time increasing their holdings in euro bonds. And this has been non-stop. And we've seen the continual rise in the euro. The only way to fight that is for Draghi to eventually take action. Now, with all that being said, as far as fundamentals, what do you and I as traders look at? At this point, I'm considering the fact that we're going to see the euro drop back lower. You can see back on the daily chart that the market had risen up here in this area. At the same time, the Traders Dynamic Index, you can use a MACD or another oscillator, but it showed negative divergence. And I think that the market's looking to get back down into this area here. So if we break down in a range that we're currently in, we're going to see the fact that the market can come back down to right around that 138.25 area. If the market breaks at 138.25, I'm looking for, from that swing low to this swing high up here, I'm looking for the market to get back down somewhere in the vicinity of 37.60.50 area, then a possible push down all the way down to that 137.20, 137.12 area, somewhere in here. So just make note that these are a couple levels that we could look for the market to possibly push down to, right in that area there. Now then, if you go all the way down to the lows that we had back in January of 2014, now take a look what we have here. The 50% puts us right back down to about that 37.20 area, and the 618, And guess where it sits at? Right back down near that swing low. So as we look at the euro big picture and considering where it's going to go from here, make note 138.25, 137.60 area. Then it may play around in this area. We did have some range going on in this area here. You can see it occurring also back in over in this area. So there's a possibility that we bounce around between 3,700 up to 3,760 area. If we break 137.00, then the slide on down to 136.50 area. Well, those are my thoughts looking at the euro big picture. Be also cognizant that getting in front of an oncoming train isn't necessarily the best thing to do. Even though this is very low right here, and just make note of this, this is very low. If the market comes back up, the yellow, the red, and the green lines come back up, market sentiment comes back to the 50 level, and price doesn't come back that much, and we don't get back above, see, it's right at the 23.6. If we don't go any higher than that, towards the 38.2, then we look for continuance to the downside. And so if you step out and take a look at this a little bit further out, step out one more to the 4-hour chart, you're going to see that if it breaks this 38.45, it's going to test that resistance level. And then we have these other levels already noted where to go. So as you trade it, just be aware that we might get a pull back up. There might be one more attempt higher. But at this point, some of the major institutions are looking for a move lower now, having forecasted a potential move to 142 before Draghi's comments, now suggesting a possible move back down to that 136 to 137 area. So look for the move down, and as it moves down, what I like to do, very simply, is to look for the most probable levels. And that's a previous support or resistance, or in this case, go from the last swing high to the last swing low, run your Fibonacci retracement in the opposite direction, and look for the market to go down to the 127.2, the 141.4, the 1618. I think that if we break this 38.50 area and then we break 38.25, start looking for the market to step down in these levels. Look for any back and forth action between these two over the coming days. Well, this is Dean Malone with CompassFX. Hope some of the information I've shared with you about trading the euro and where it might go, and again, looking at that bigger picture, where it might go in the coming days will help you in your trading. This is Dean Malone with CompassFX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.